Are cryptocurrencies secure? Given the recent surge in cryptocurrency trading and countries' difficulties maintaining uniform regulation, the issue seems reasonable. Given that recent research from Allied Industry Research predicts that the global cryptocurrency market will more than triple by 2030, security, or lack thereof, of cryptocurrencies will probably continue to be a major problem in the years to come. Welcome to Crypto Inquiry, where we are dedicated to providing you, the investor, and the crypto curious with factual information and topics. Our goal is to keep you informed, to make educated and timely decisions, and remove the fog of hidden information. Nothing is meant as financial advice, and always do your own research before investing. Here, we are building a community to help each other stay informed and make the most of our financial gains. The truth about how secure encryption is difficult to say, at least for the time being. Yes, there are security dangers associated with cryptocurrencies that you should be aware of before executing your first transaction. First off, cryptocurrencies continue to be a type of asset with high price volatility. Second, several con artists rely on unwary entrants into this relatively unregulated and young financial environment. But crypto also attracts because it offers certain security advantages. Before delving further into crypto, we will go through the key security considerations in this video. Purchasing cryptocurrencies might be viewed as being much riskier than investing in traditional asset types like equities and government bonds. While cryptocurrencies are largely accepted as being legal throughout Europe, many of their elements are still unregulated or may be susceptible to changing laws. As we witnessed in the summer of 2021, when China's crackdown on cryptocurrency-related activity coincided with a decline in the price of Bitcoin. Fluctuating rules are one factor that can make crypto markets more susceptible to volatility. Other causes may add to cryptocurrency's volatility in the future, especially with so many governments throughout the world considering how to respond to its emergence. The fact that cryptocurrency is still relatively new and investors may not be sure what to make of it at this point contributes to its overall volatility in part. Cryptocurrency may be more susceptible to significant price movements associated with fluctuating investor opinion since it has the same historical evidence elements as other asset classes, such as equities. Although certain cryptocurrencies are more susceptible to volatility than others, even Bitcoin, the oldest and largest cryptocurrency by market size is renowned for its unsetting price fluctuations. By not purchasing more crypto than you can reasonably afford to lose, you can reduce the danger of your investment. Exercise prudence and take into account a diverse portfolio of assets, with crypto having a reduced and more speculative role. There is still a non-zero risk that every crypto asset may experience a day in which its value plummets. A blockchain, which Dr. Alexander Shipilov, CEO of the blockchain-based marketplace iModX, characterizes as a technique for numerous computers to agree on a set of information, is the platform on which cryptocurrencies are traded. The most typical application of a blockchain, according to him, is to compile a record of financial transactions involving several people. Blockchains function through the use of cryptography, with every block in the chain being cryptographically linked to the one before it. The blockchain is stored and shared across a network of peer-to-peer nodes, similar to file-sharing torrents. The blocks are cryptographically secured against tampering. This makes it very difficult for nefarious parties to modify or shut down, Rob Zell, founder of crypto exchange Bitney.com, says. Are there security risks associated with cryptocurrency? Yes, there are some security risks you should be aware of. Cryptocurrency scams are common. If you haven't already, you may have already gotten an email threatening to publish embarrassing pictures of you unless you pay a particular sum in Bitcoin. Or perhaps you got a strange message congratulating you on winning a valuable Bitcoin prize or a rare NFT. These are but a few instances of fraud to be on the lookout for. Generally speaking, if someone demands payment in cryptocurrency while rejecting other forms of payment, they could be trying to steal your money. And chances are good that someone is trying to con you if they push you to make a payment using cryptocurrency in any other method. Blockchain technology is used by several cryptocurrencies to provide a safe, editable, and public ledger of transactions. Because of this technique, cryptographic transactions are typically neither editable nor reversible after the fact, which has security advantages. If something goes wrong after you pay someone with cryptocurrency, you normally won't be able to arrange a refund by calling customer support. These are only a handful of the security dangers connected to cryptocurrencies. As the crypto ecosystem develops, new ones keep emerging. It could be worthwhile to periodically check the U.S. Federal Trade Commission's material on crypto frauds and security because it is updated as new information becomes available. The number of digital platforms and marketplaces where investors may buy and sell cryptocurrencies has increased in line with the emergence of cryptocurrencies. The safer online platforms, which adhere to Know Your Customer and anti-money laundering laws, will often require you to provide identification. Before using certain trading tools, several well-known crypto exchanges, like Coinbase, ask their users to verify personal information. It is a typically good idea to choose a platform or marketplace that takes security seriously and uses these kinds of measures to verify your identity if you are just getting started in the cryptocurrency world. Keeping cryptocurrencies offline and isolated from people who may be able to access them through an internet connection is, in general, the most secure way to store them. If you utilize a hardware wallet, also known as a cold wallet or cold storage, you may keep your cryptocurrency offline. Online or desktop digital wallets, sometimes known as hot wallets, may be more susceptible to hacker theft. There are many different kinds of cryptocurrency wallets available, including hardware wallets from well-known brands like Ledger and Trezor. The drawback with hot wallets is that they may be rather pricey. And if you lose or forget your wallet, you'll still need a recovery seed to have access to your cryptocurrency again. Nevertheless, they are now the most secure choice. Simply said, there isn't a cryptocurrency that is the most secure. This is not to say that certain cryptocurrencies aren't probably safer than others. Due to their use of decentralized blockchain tech, currencies like Bitcoin and Ethereum are considered to have certain built-in security measures, and their greater acceptance, in comparison to alternative so-called altcoins, may make them less susceptible to sharp price fluctuations. It is important to note that one of the benefits of decentralized blockchain technology is security, to provide buyers and sellers additional security in their dealings and eliminate the requirement for a reliable third party. Bitcoin itself was developed. Let's take a look at the most important cryptocurrency, Bitcoin, to demonstrate how various cryptocurrencies might increase in value. Throughout 2020, the price of Bitcoin approximately doubled, ending the year at or around $28,900. BTC's price had more than quadrupled by April 2021 compared to January, but by July, all of those advances had been erased. Then on November 10, 2021, BTC more than doubled once again, reaching an intraday high of $68,990. However, by the end of 2021, it had plummeted to about $46,000. Early in June 2022, the price of a single Bitcoin is a little over $31,000. The original cryptocurrency has decreased by 35% year to date, yet Bitcoin has increased by more than 1,000% during the last 5 years. Currently, Bitcoin and other cryptocurrencies are viewed as both a financial asset that can be exchanged like stocks and a medium of exchange for goods and services. However, according to Zell, its broad use as a medium of exchange is hampered by high transaction costs and coin volatility. Bitcoin and other cryptocurrencies can be used for transactions, but it's not always the best option. According to Shibalov, the great majority of cryptocurrencies are now considered more as assets than as money. Investors who believe the asset would appreciate over a lengthy period of time are speculating on them, he claims. Even though millions of dollars have been made through the Bitcoin investments in the previous year, cryptocurrencies may not be the ideal option for novice investors or those with a limited appetite for risk. Crypto is non-regulated assets with a high degree of volatility, limited government oversight, and the majority of cryptocurrencies lose most or all of their value extremely quickly, with over half failing in the first 4 months, said Shibalov. Well, that's a wrap on this video. So what do you think about the long-term safety of crypto as a viable investment avenue? Be sure to let us know in the comments below. See you in the next one.